The coronavirus has crippled the US economy. The presidential election is slated for the autumn this year. The Federal Reserve has to inject massive stimulus funds into the economy. Under such conditions, the US dollar finds it hard to stay above the level of 100 points. The greenback is set to continue its downtrend in the nearest days. Today, American trading floors are closed on Good Friday. The thin market is trading under low volatility and currencies gyrate without obvious reasons. Trading sentiment depends on yesterday's factors: downbeat macroeconomic data, odds to pessimism among global investors. The number of initial jobless claims posted another soaring figure. Traders are fretted about weekly updates on unemployment claims and crucial US nonfarm payrolls to estimate the conditions in the labor market. On Friday, traders focus on inflation data from the United States. A consumer price index slid by 0.4% in March, worse than a 0.3% drop in the consensus. This is bearish to the US dollar. The US dollar index closed on Thursday with a sharp fall. Today, it's still trading lower at around 99.40. The heaviest blow to the greenback came from the Fed Reserve as the regulator is pumping up global financial markets with the dollars. Yesterday, Jerome Powell announced an additional stimulus program worth $2.3 trillion to share up households and local governments. The US Fed has launched unprecedented stimulus packages in American history. This year is of great importance to the White House. The presidential election will take place in half a year. This could be another reason behind such active stimulus measures. Unlike the US dollar, stock perked up following the news from the Fed Reserve. Today, the US stock market is trading in the black. Last month, Canada's economy lost over 1 million jobs. Nevertheless, the USD CAD pair went below the level of 1.40. The loonie found support from the agreement between large oil exporters on production cuts. However, the loonie strength could be short-lived as macroeconomic data reveals that Canada's economy has been badly hurt by the coronavirus. Investors are braced for the dismal data for April. Today, the USD CAD pair aims to break downwards the level of 1.3950. The pair could even test a deeper level of 1.3822. Following a bounce, oil is trading slightly lower despite the long-awaited oil production cuts. No radical changes in crudes are expected today as oil futures are not traded on Good Friday. WTI is finishing the week at near $23 a barrel. In the past few days, Bitcoin has been trading in the range of $7,400 to $7,200 per token. Today, to make two failed attempts to climb over 7,400. Eventually, the most popular cryptocurrency sank to $6,900. The combined market capitalization again decreased to about $200 billion. The Bitcoin dominance index dipped to 64.1%. At present, the bulls find it necessary to keep the price in the range of $6,462 to $6,800 as Bitcoin is running a risk to test such lows in the short term. Over the last 24 hours, Bitcoin shed more than 4%, pushing down other cryptocurrencies. Escaping from the trading range, Bitcoin frequently comes under selling pressure. That's all for today. We wish you profitable deals and have a nice weekend. See you on Monday.